so nice to be back with all of my Texas friends, and I always just try to jump on the opportunity to come to Texas. Been gone for a long time, but it just seems like it's always good to be back among my Texas friends who are different than anyone else in the world. So, and my favorite by far. So I've got a lot to talk to you about. I want to tell you a little bit about the slides that are going to pop up in a minute. There's way more information on the slides than can come out of my mouth in 1 hour. So I did that on purpose because sometimes I see people, frantically trying to take notes, which you're welcome to do, but there's a lot of the most important things are already on those slides. So I sort of took your notes for you, and they're on the slide. So if you want to just listen, if there's something that I say that's not on the slide, I'll stop and say that wasn't on the slide, or that wasn't on the slide, and do not write it down. So we have, I'll go ahead and talk through what I know the first slide is. I want to talk a little bit about the makeup of Congress right now. Can you all still hear me? No? Do I need to hold this? Yes. Now you can hear me.
Yes.
So I want to talk a little bit about the makeup of Congress. I know that you all know what it is, but I want you just to give you a little bit of different frame of reference about what I want you to think about as you hear the other information. So I know that everyone knows that Democrats control the House, the Senate, and the White House. What's really important to remember is that the majorities in the House and the Senate are very narrow. We talk all the time about the Senate majority, which is it's 50-50, and then Kamala Harris is a tiebreaker. That's what makes it 51. But we don't talk too much about the House. Both of them are important. First of all, in the Senate, even if you had something that wasn't quite 50-50 and the margins were still narrow between Republicans and Democrats, it's hard to get anything done with a narrow margin, whether it's like it is now or whether it's like it was before the election. It's very hard because there are so many parliamentary procedures that are subject to things like the filibuster, parliamentary holds, and other things that require 60 votes to allow a vote to proceed forward. That's called breaking cloture, if you hear that term. And there are so many of those things. I saw it a minute ago, Dave. There are so many of those things that it makes it difficult to get anything done. There are very few measures in the Senate that can pass forward with a simple majority. Most of them are subject to being filibustered, with the exception of budget reconciliation bills and certain other measures that have to do with keeping the doors the lights on and that kind of thing. So there are a couple of things during the year, but most of the time, everything is subject to filibuster. So things will pass out of the House, they go to the Senate to die. And that happened a lot during the Trump administration. That's one of the reasons why we saw so much regulatory action during the Trump administration, was because of that very reason, is that things would just go over there and they couldn't go any further. So we have to look really closely at what sort of measures could things go through without being subject to that. And those are the types of things that you have to watch really closely. Except for one other factor, and that is that the margins in the House are also very narrow. So everyone expected, with this kind of blue wave going through, with Biden being elected, that there was a general thought that the number of Democrats in the House would also increase, and just the opposite happened. So there were a number of Republicans that took over what were considered safe Democrat seats in the House. So the margin in the House is also, it's not as close as in the Senate, but it's pretty close for the House. And then the only other thing I want to mention relative to this makeup, and what if this is a recipe for stagnation, for things really not to go anywhere, because within each party, there are factions. There are a number of factions in the Republican Party. There are very few moderates. There are a couple of moderates in the Senate, almost none in the House, a couple, but not too many. So they're either conservative, very conservative, to the right of Attila the Hun, and some of them are way, way far, they're much more extreme than you think they are. Some of them are. And most of them are in the kind of that very conservative category. Most of the Republicans are. And then Democrats are much more divided than they have been as well. So we've got this pocket of people that are way to the left, and they are the ones that want single payer and things like that. And then you've got some that are sort of moderate, and then you've got the actual moderates. So there are actually some actual moderates in the House, and some in the Senate as well, who cause all kinds of grief for their party. Because even when they have something that they could pass with a simple majority, half the time they can't get their 2 or 3 renegades to vote with them anyway, so they can't even make a simple majority. So why am I telling you all of this? Well, I'm telling you all of this because don't worry so much about the makeup of who's in there right now. We just have to try to do the right thing and communicate the right thing. Things are cyclical. Sometimes one party's in, sometimes another is in. So we go out of our way at NAHU to make sure that we have very good relationships on both sides of the aisle. And that protects you and allows us to function regardless of who is in. And then the only other thing I would point out, I'm going to spend a good amount of time on the regulatory process today for a very good reason. Anytime you have these narrow margins, what happens? Regulation is up because it's much faster. They don't have to get congressional approval. And you would be shocked at how much you can get done on a regulatory basis. It's all a matter of someone questions you. They're going to go with whatever they think that they can do. Trump administration did the same thing. They pressed the envelope many times, got pushed back a few times in court, as all administrations do. This is business as usual, and that's just the way that it occurs. And then the one other thing I'll mention, we actually have very quickly coming up on us now another election in 2022. And what normally happens at a midterm election like that is that whatever party's in the White House, that's the party that actually loses seats. So it's very, very possible that Republicans would take over the majority since they're already kind of ahead of the game from this last election. It's very possible they would take over the House. So what we will see is in terms of legislative efforts, even though it's difficult with the tight majorities, the Biden administration will try to push their agenda as much as they can in these first 2 years before that 2022 election. Because they know what history says about the losing of the seats. And it's very, very close already. So you'll see a lot of if you think that you're seeing so much activity coming forward, there's a method to the madness. And any administration, Republican or Democrat, would do exactly the same thing and try to get as much of their agenda done. Because right now, this is the most favorable that it could be for them, even though it's not that easy to get things done. And then I'm not going to say anything more about the House. I've talked about that, except to tell you, Nancy Pelosi is still someone to watch. And the reason why she is that doesn't matter. Try to just separate whether you like her or not. I know it's hard. But just look at it objectively. I know you all think that she's an evil woman. Or maybe you don't all think that, but I know a lot of you do. But the reason why I want you to think about her, I want you to be objective for a minute and think, what is she supposed to be doing? As a speaker, any party, she's supposed to rally her troops, get them to vote together the way she wants, get them to push things through when she wants and to block things when she wants to block. That's what she's got some different kinds of people that she's got a big challenge this year. Why does she keep getting elected speaker or majority leader? Why is that? She is really good at her job. That's why she keeps getting reelected. She is really good at it. It doesn't matter that we don't like her. We just need to know, is she good at what she's supposed to be doing? Because that means you have to watch more closely what she's doing. And she has a chief policy aide that is one of the best people to work with on anywhere. He's extremely moderate, and he really pretty much calls the shots about where she's going on everything. We only think these people that we elect are the ones that are making the decisions. A lot of time it is their senior staff, because they've got this volume of information coming at them, and they can't possibly absorb that or be an expert on everything. So they have these people that work for them. You know, one is an expert on this, and one is an expert on that, and that person's. Those people are very young, most of them. Not her assistant, who's probably my age, but a lot of them are young and really smart. So that's the point I wanted to make about that. I know you don't like her, but the point is, does she do her job well? And that means you have to really not make any assumptions about what will or will not come out of the House. Okay, the filibuster. A lot of people have talked about whether the filibuster is going away, since it causes things to slow down so much. First of all, they don't have the votes to vote the filibuster out. There are several key Democrat senators that do not want to get rid of the filibuster for a very good reason. Whichever party is not in power, that's who the filibuster favors. So it favors the minority party, and they all know that they're going to get cyclical. Sometimes they'll be the majority, sometimes they'll be the minority, and the filibuster protects the minority against the majority just shoving everything through that they could ever possibly want to do. So that's why the filibuster is not going to go away. I don't care what you hear about it. It would be, they don't have the votes to do it, number one, but it's really political suicide in my mind. I can't imagine why anyone would want to. You'd be very short-sighted, because you get all of your stuff done once. And then every time in the future that you have an agenda, that's like thinking that there's never anything, the next thing to do. So it would be really short-sighted. So the main way that things get done, we have had, I'm going to tell you about some bipartisan action that we just had occur, but most of these things are going to be done on a very partisan basis. And there will be things that will go through with 0 Republican votes. And that is kind of the order of the day. It used to be that they would really work together all the time. When I first got to Washington, was in 1997, they worked together on a bipartisan basis regularly. That was kind of the rule of the day. And that doesn't really occur that much anymore on a regular basis. It has to be contrived. For example, when we want to push a particular piece of legislation, we usually have to go find their co-sponsor for them. They aren't going to go talk to the people they work with to do it themselves. So we have to find someone that we think that they would be able to stand each other, to be, this is normal. This happens all the time. And other organizations have to do it too if they're in that team. So reconciliation is one way in the Senate to avoid the filibuster. Only certain bills qualify under that. They have to be budget related. There are only a certain number of reconciliation options per year. It's usually 1 per year. We have 1 more left that can be used in 21 and 1 that can be used in 22. We've already used 1 already on the American Rescue Act. Those things can pass through with just a simple majority. And right now and that's how we passed the American Rescue Act. Or how they passed the American Rescue Act. The only thing I know that you all are familiar with what was in that. The reason I want to point this out, I'm not going to go through all the things that were in that piece of legislation, except for 2 things. I want to talk for a little bit about exchange subsidies, and as you know, they've changed dramatically, and I'm not going to read everything to you that's on this slide. You'll have this for notes if you need that. But what I want to point out to you is this is likely to not be the temporary program that it is today. This is one of number 1, 2, or 3 on all of their hit lists. They want to rearrange the subsidies so that they look like this on a permanent basis. So this is something just for you to expect that this will occur. And it could be that they try to add this on to the next reconciliation bill, just sort of wrap it up with the next one which they're working on right now, and it will probably come up for a vote in September. So that's why I wanted to let you know of all those things that were in there, which ones are going to stick. It hasn't stuck yet, but that's likely to. And the other one is the dependent care FSAs. And then if any of you have small children and an FSA, you know that the $5,000 limit right now doesn't touch what it costs for child care for one kid for a year, right? Particularly if they're very young. So that's like there are a lot of Democrats that are in favor of expanding that, maybe through reconciliation, maybe through some other option. So on August 10th, we actually had something pass out of the Senate that actually was worked on a bipartisan basis. We have a couple of champions in the Senate. One is Susan Collins, who's a moderate Republican from Maine, and the other one is Joe Manchin from West Virginia, who have just been really pounding the pavement, making calls. Everybody they know, it's like we've got to start working on a bipartisan basis again. And with the help of a few others, they're kind of the leaders in each of the parties. Joe Manchin frequently votes exactly the opposite of the way the rest of his party does, and it infuriates them, but he does it all the time. But he's the one that really pushed for that. And so then we did get this passed out of the Senate. It is an infrastructure bill. They were able to not have to use reconciliation for that. So this is a regular piece of legislation. So it passed out of the Senate and it didn't have to do with a simple majority. It passed under regular order on a bipartisan basis. It has a couple of health things in it that I wanted to call out to you, not as many as we would have thought. One of them is it reinstalls a 2% payment cut to Medicare providers, which starts next year. And it was originally put in there the cut was in there, but then it was stopped during the pandemic. So it's really just reinstating something that was already going to happen. And that's to help control costs in the Medicare program. And then for those of you that are familiar with the rule that came out during the Trump administration relative to prescription drug rebates, that has been delayed again for an additional 3-year period. There are a lot of questions about how that should be structured. Under the way it's currently structured, most of the policy reports that we see would show the Part D premiums rising dramatically, even though they're trying to do something good. That it's just not structured correctly. So we can expect that whole rule from before to be restructured so it doesn't have that premium impact on Part D. Okay, they are working, as I said, on another budget reconciliation bill. You can see the list of some of the items that are on there. An additional thing that they're looking at that is being talked about very seriously is lowering the Medicare eligibility age to age 60. And it has already gotten approval from the Senate parliamentarian that it could be added if they decide to do that. A lot of it will have to do with how the numbers work out. They've got a lot of things on their laundry list. I would say on their list, they would look at something like expanding those premium tax credits permanently would be higher on their list than lowering the Medicare eligibility age. So we've been very vocal on that, as well as everything single payer, public option. And there's a lot of information that I could go into. I'll talk about a few things in a few moments, but some of these items will be included, some won't. They're also pretty likely to add they're looking at some extra benefits for the Medicare program, not just Medicare Advantage, but the Medicare program itself, so that some of the things that are currently covered as extra benefits under Medicare Advantage would instead be considered just a regular Medicare benefit. So that could have implications for the cost of supplements for sure, because if you think about the structure of supplements and what they do, and it could also have an effect on Medicare Advantage pricing. It'll just depend on how they price those services and how many of them they include. That's kind of likely to make it in there. I sort of doubt the Medicare eligibility age, but it's pretty expensive to do that. I don't think they'll have the money, but they might, so it might be in there. But a regular type of public option won't pass the parliamentarian's approval because it's not enough related to the budget to be an acceptable item to be included in budget reconciliation. So these are some of the other things they're looking at. When you see them talking about long-term care for seniors, that's just horrendously expensive. So some of these things are their wish list. A wish list is not the same with what they can actually get done, but they'll have a few things in there, and then there'll be the other things that they want to do. Okay. So as we see things come out of the administration really quickly, I want to talk about what we're likely to see. So the Biden, just to make sure everyone understands, the Biden administration is not in favor of single payer. Joe Biden is very, very proud of the ACA because he considers that his achievement that he had with President Obama. And so what he wants to do is improve the ACA. Of course, improving things is in the eyes of the beholder, what they would like to see improved. Some of the things would be the same things that you would see, and some of them not really. For example, we don't think a public option is an improvement, and almost every Democrat does, even if they don't like single payer. They're just looking for an additional affordable choice, but some of them probably have different motivations. But most of them are just, they don't really understand the market implications, which primarily are, public option as designed would pay its providers Medicare rates by law. They would be allowed to do it statutorily, but they would be allowed to do that. And of course, private plans are not permitted to mandate that on a provider. And then they would have a big hammer that would say, oh, provider, you don't want to be in our program because we're paying Medicare rates. Well, I guess you don't want any of your Medicare patients either. And so it's a really kind of a forced participation, so to speak. So there are a lot of reasons why we've been very, very vocal on single payer and public option, and we really consider the Medicare eligibility age to fall into the same category. There's not enough information about it. We don't know how the pooling would work. We don't know if they would be pooled with the people currently in the program or if a new pool would be created. We don't know how you would establish rates, by the way, if you don't have any younger people in the pool to spread the risk over, or whether they would just establish rates by throwing something at the dartboard and see what sticks. And that would be very dangerous. But they would have the ability to do it because the language in all of these says, the secretary determines what the rate is. Period. So you'll see us continue to be really vocal on that. But I think that the public option, even though most Democrats favor, almost all of them do, it's not number one on their list. This issue about expanding the tax credits and making sure that people who don't have anything today have some ability to be able to have health insurance coverage, that is more important to them. So think in terms of let's just use Texas for an example. So Texas didn't expand Medicaid under the ACA. They'll look at ways to make that happen anyway, so that people will just have those benefits, even if it's all paid by the federal government. That would be an example. They're looking for people that are uncovered for any reason. And so or in the individual market, why are they so interested in these subsidies? They're interested in the subsidies because they wanted to make sure that people can afford to access the coverage. And that's why they also want to expand the cost-sharing subsidies, because they know deductibles are bigger than they used to be. So they're looking at things like that. There'll be a lot of things kind of in that category, sort of gap fillers. So you'll see those types of things added in. They'll also, and they've already are very quickly about the business of undoing some of the Trump executive orders. They absolutely cannot stand the short-term limited duration coverage. They would love to outlaw it, but they are more likely, what they're looking at more seriously is going back to the Obama rules where you could keep a limited duration policy for 90 days. So that's just, that'll probably happen pretty shortly. They also want to do something that we've been in favor of as well, which is fixing the family glitch. Those of you in the individual market, you know what I'm talking about, where people get kind of priced out of a tax credit because there's an affordable employee contribution but no dependent contribution. So the dependents, because the employee is eligible and it's affordable for that person, they are not able to access tax credit, which would help pay, and they often go uninsured. So we can expect that to be fixed. What we have to be very careful of is to make sure that they don't overfix it. So when these proposals start moving forward on this, and when I say that, we want to make sure that it just lets the dependents opt out of it and not that employee. You've got to maintain the employer firewall. And that's important for a lot of different issues. Otherwise, the employer-sponsored system will start unraveling because of adverse selection. So those are the things that we're watching really closely. And so some of the things, it's not difficult for us to work with the administration because there are some things where we have some level of agreement with them. So we have had no problem at all meeting with any of them. And we started as soon as, we started actually before the election was over. You always, if you don't do that, you're not very smart. You've got to make sure you work with the transition team and that the transition team identifies you as a group that they ought to listen to. And that, and I know that from personal experience because I was on George Bush's transition team. And so we identified all the people that were important to all the people that were appointed and coming into office. So, you know, these are people that are smart. These people, no. These, yes, no, yes, you know, and so if you don't start early and you don't make friends like really fast, if you don't already know them, then you have just, you know, cut yourself off for a few years. So it's just super important that you constantly kind of calculate what's going to happen, what has happened, what might happen, and sort of cover your bases all of those ways. On prescription drug pricing, we are going to probably see a lot of activity on this. We had one big House bill, H.R. 3, which went a lot farther than any Republican will agree to. Some Republicans are saying that H.R. 3 had price controls, which I guess it sort of did, but not specifically. It could have been amended, but there's a more palatable bill that's coming out of the Senate. Senator Wyden's prescription drug bill may come forward on a bipartisan basis. So they are working together to try to push it through like that. We've had a lot of stakeholder calls with Senator Wyden's office, you know, where we're providing them input on the structure of that legislation, and a lot of it will probably address issues related to PBM transparency. Well, there is a bipartisan agreement on that, and the ability of employers to receive information from the PBMs relative to their accounts and so forth. So you'll see a lot of activity on this. I already told you about this coming through. I just want to let you know, and I'm not going to go through all of these things we've submitted on, but we actively submit testimony, even though the in-person hearings are not as many as there normally are. But there's still the opportunity to submit testimony for the record, which we regularly do. It's very, very effective in getting the attention of committee staff, who are the ones that kind of rule everything on Capitol Hill. By the way, Capitol Hill is still closed for regular meetings, so we can't go in and meet in person with them at the moment. We meet via Zoom calls. I think we've actually had more lobby meetings than we did the in-person way. I think because you can put more together. So we've worked a lot on things like that have to do with telemedicine. We've worked on a number of our main issues, prescription drug issues, mental health. We submitted a testimony relative to mental health. I just submitted something to the Energy and Commerce Committee that had to do with public option. They'd sent out this request for information. I don't know why I find it funny, but it was a little funny if you have an odd sense of humor like I do. So they sent out this, and they took all the parties that were on their list of people that might know something. So we were on their list. And it was, how do we structure a public option so that should we do this, should we do that? And there were 8 questions, and all of which was, or no, you shouldn't do any of those things. Actually, you shouldn't have a public option. And so at first I thought, I can't even answer this. And then we did submit some comments to them, which one of our colleagues in the office told me was a polite way of saying no. So, you know, if you come from Texas, you can learn how to say bless your heart, right? So you can say it the same way about other things as well. And so we submit things all the time. And of course, we submit comments on every regulation. We're very heavy into the regulatory side, which is where you really have to spend even more time there than you do on the Hill right now. So speaking of that, I'm not going to go through, this is just a run through just for your notes purposes. I'm going to go through these slides. Next one's pretty fast. But I want to point out a couple of things. We've had this, we had the initial Biden rule on the special enrollment period. You all know that. And they're also, in the latest version of the rule, just to let you know what's going to happen with the enrollment period, it is going to go through to January 1. Or to January 15th. So that's now they could expand it longer than that, but it's not going to be, through May or anything like that on a permanent basis. That was just a pandemic response. So that's what they're going to do. I'll talk to you about some of that. I want to talk a little bit about what was done in the Trump administration on the most favored nation status. President Trump was actually pretty, he was not quite in line with the rest of his party relative to what he thought needed to be done with prescription drug issues. He was looking at some pretty significant things that needed to be done, even doing some things like European countries do. Some of them use most favored nation, and they require pricing to match that. That particular thing is not the particular type of thing that's favored by the Biden administration necessarily, although they haven't ruled it out. But you can expect some other activity there from them in terms of what they can do. So let's talk about what they can do. One of the things that was a problem with most favored nation and the Trump administration is it only affected Medicare Part B. So that's injectable drugs and the drugs that are covered under Medicare Part B, some of which are very expensive, but it doesn't touch all the things that are some of the most problematic that we have out there. The fact is that this administration can't touch the other things either. So they've really got to be more aggressive on the things where they can be more aggressive. One of the things that they might look at, I'm not going to go into details, but this can be homework that will be of interest to you. So the way Germany does their prescription drugs, Germany's a big drug manufacturing country like we are. They're not as big as we are, but they have quite a few drug manufacturers there. So it's one of the few parts of their healthcare system where the government does not set the prices. It's because of their industry there. And they have a nonprofit council that looks at new drugs entering the market, and they convene together to control how high the price can be. So of the European countries, they are the most expensive, but compared to us, they are way less expensive. So it's not controlled by the government. There's this group of industry that comes together, and it's into this organization that's set up as a nonprofit, and they examine a lot of different things. Is the drug effective? What is it for? And different conditions are rated differently. How many other drugs are in that category? And so forth. So it's really kind of interesting. So if you need nighttime reading, just Google the German drug pricing model. It's actually kind of interesting because it's not a price control thing, and it actually might could work in the United States. And I believe this administration is super interested in looking at that. It's very different than what you think it is. You'll find it interesting just when you read it. It won't really put you to sleep. Well, it might, but I doubt it. So that's going to change. Okay, so the other thing that I wanted to point out to you, there it is we have this notice of benefit and payment parameters. It sounds like the most boring regulation ever, right? And actually it's pretty boring. But there are a couple of things in it that I just want to point out to you that will change. The first part, when this first came out, the first edition of the rule came out in January, and it was actually it came from the Trump side. And it just made its way through the cycle and showed up in January. And then when the next version of the same rule came out, it rescinded a couple of things that were in the first version of the proposed rules. And one of that was the Trump administration had expanded the ability in the individual market for ACA type plans. They expanded the ability for people to buy directly either through web brokers or directly from insurance companies. So this direct enrollment mechanism. And they created some new ability to have those pathways. So the Biden administration felt like that eliminated the ability of consumers to see the multitude of all the things that might be available to them. And so they've pulled that back now. So that if you were thinking, if you're a web broker or somebody involved in direct enrollment, you're not going to be able to do it anymore. The other thing, it's not a huge change, it only affects greatly the people that it affects. For most of you, it won't affect you at all. And then the 1332 waivers is another something in the weeds, but it's actually pretty important. So they pulled back some of the changes that were made in the Trump administration relative to the ability to fund reinsurance programs at the state level with tax credit money, savings money. And they took away that ability to do that. You can expect that some of these 1332 waivers, which are an Affordable Care Act waiver that allows the state to do something different than the actual ACA law, as long as they achieve the objectives. So a lot of them now are being facilitated to create public option plans. We have a ton of state public options that have been proposed in a variety of states. We have 2 states that have passed them already. A third probably will be pretty soon. We work really aggressively at the state level as well, and we've been able to get those very, very watered down so that actually the last study we saw that we watered it down so much that the public option was more expensive than the private plan. The regulatory process, I don't have any reporters in here, right? Do I have any reporters in here? No. So the regulatory process is interesting. When we don't care for a piece of legislation that goes through, we hope that some of the provisions, or many of them, are vague and not specific. And that allows you a lot of leeway to influence the regulatory process. And you can create a lot of balls and chains of things so that you don't ruin any relationship you have. You just provide advice that keeps a process from being successful. So in other words, it might slow down the level of the ability to implement something that you don't really want implemented. Does that make sense? So anyway, that's why the relationships matter. Okay, I want to get through some of this. How am I time? Who's keeping my time? Anybody?
I'm kind of keeping time, but I do have a few questions at the end.
Okay. Okay, so I'm going to go through a couple of these. I want to talk about, before I get to that, so I just want to let you know we're very, very involved in surprise billing. Is that the right one? Yeah. We'll talk about that. I want to let you know on surprise billing that we're extremely involved in the regulatory process relative to that. The first rules that came out didn't really tell us what we wanted to know, so we've been back and forth with them numerous times. We don't have enough information about what the arbitration process looks like, who's allowed to do it, and certain other provisions in there. We would have preferred not to have an arbitration process. It's quite expensive, of course, particularly for self-funded plans, and particularly for smaller self-funded plans. But we're continuing to work with them relative to that. There is some language included in the regulation that did come out that hasn't gotten a lot of attention, and we're kind of happy about that. Because one of the things it created was some ability to have some sort of a standardized rate to start off the talking process. And it's not the same as what we asked for. It's kind of buried within the language a little bit, but we'll see what they do with it in the next set of regulations. But it could be that we are going to get a lot of what we had originally asked for and presented on a different plate. Jennifer?
I hope the Maronis speak to this, but with the arbitration and the surprise billing, we have arbitration and mediation in Texas, and I don't understand the argument of it being expensive. Can you elaborate on that?
So think if you are, well, if you've got an agency that's approved to do it, so it's a matter of who they allow to do it.
Right, probably the board of arbitrators and everything.
But we don't know what the federal law will say. So
Okay.
they're likely to use that because it's an existing thing. They're giving a lot of credence to states that have already created their own legislation. So that's what I'm talking about. So I'm thinking of let's pretend that you're in a state and it doesn't have that. You're not in Texas. Let's pretend you're somewhere else. So think of a small level funded plan, and it's on the employer's responsibility to pay for it. And, they're small. I'm going to say it's like 8 young people or something like that. Those are the ones where the arbitration process can be more than they can pay for. If there's not an entity created, I'm not talking about what's here. So in some states, it's more of a problem than others. So I want to talk about broker compensation. The initial regulation that, first of all, why did this happen? Let's talk about that. The reason why this happened was because there was one person who decided that his way of doing his health insurance business was the only way to do things. It's not that his way is wrong, it's just a way to do it. It's not the only one. And he implied to the reporter that he was talking to that, he didn't imply, he said it straight out, that most brokers just want to hide the amount of money they make, that they are not transparent with their clients at all, and that they're just, cashing it in. And it was a really, really negative article. It's a ProPublica article. You might want to look it up so that you can understand how this happened. Well, it was just, it's ProPublica.
It'll be in this month's newsletter. So read the newsletter.
So you should read this. It affects all of you. So you should read this. So the first set of regulations, so this is why it came through. Everyone on the Hill reads ProPublica. And this was pushed forward by Republicans, not Democrats. Democrats clamored on afterwards, but this was a Republican initiative from the Senate Health Committee, who was convinced by the nature of the article, which does sound pretty bad. If you read it, you'll see. So as a result, because we're all in this phase of transparency about everything, hospital transparency, insurer health plan transparency, broker transparency, transparency is the word of the day. And this is how it occurred. We actually worked with them for 3 years on not doing this. And the language was way worse before, believe it or not. But the main issue here is, what you have to disclose and when. There's some really significant, which is not really decided yet. There's still a whole lot that's up in the air. And then how you disclose things that are indirect compensation, for example, bonuses or trips or something like that. Because you may not even know when you're working with a person whether you'll qualify for something at the end of the year or the end of whatever the period is. So there's a lot of that still to be discussed and to be decided. We're talking to them very frequently about it, but a lot of it has not been determined yet. So we're on it. We're going to let you know. We're trying to get something that's really standardized that will be easy for you. There's also questions relative to general agencies and how overrides would be considered, because that's how they stay in business. And it's being considered differently by different people who are at the table having the discussions. So our position at NHU is that an override is not a commission. You know, it's different. The GA's client is the broker, not the inline customer. You know, unless there's a commission split kind of thing. So that's what NAHU's position has been, but that not everyone is with us on that. So we're still working on this. We are straight thick in the middle of these conversations. We talk to them quite frequently.
Will you plug the talking points on the DAHU website and what we can do for this December 27th, 2021?
Yes, so I don't want anyone to write this down and send a message to all of your brokers. If you're a GA, don't do this. But there is a really good chance that this will be delayed. And we don't know whether it'll be delayed in its entirety or if it'll be delayed only for, a certain market or markets. But we think I think they didn't realize what a can of worms it was that they were opening and how complicated the process can actually be and how different it is from one kind of a plan to another, one market to another, and so forth. Even one broker to another, depending on a lot of different things. Whether they write both fully insured and self-funded, whether they're only in the individual market. I mean, the complications are pretty significant. But yes, we will be providing you a lot more information. There's some on the website already, so I hope that you all go to the NAHU website, but it's not everything that's going to be there. So we're trying to make it simple and easy and just really simple for you. What's really difficult is the indirect compensation, and because it's hard to make that simple. Unless none of you just ever qualify for a bonus again. I have to tell you, I've heard nothing from the carriers about discontinuing bonuses. Just in case, I didn't want to scare you by saying that. Continue to write your large amounts of business that qualify you for those. Okay, so I wish I had a bunch of news and to be able to tell you something that was really definitive. The most definitive thing is I can say is I really, really think there is going to be a delay. I just don't know whether or not it'll be for every one of you in here. It might only affect some of you. Okay, and you have on the slides here. This is just some of the talking points that we submitted in writing, but we've had these other conversations with them that weren't in writing. So we've been a part of a number of stakeholder meetings. Okay. I want to talk to you a little bit about some of the other things. Okay, so I'm going to do the speed demon thing through, and then if we have more questions, we can. I want to talk about some issues that are really important. I mentioned the employer firewall a little while ago. That is really important to maintain the integrity of employer-sponsored coverage, which covers most of the people in the United States. They're in some level of an employer-sponsored plan. We also want to protect those plans by protecting the tax exclusion. The tax exclusion is not an employer's deduction. The exclusion is that when the employer pays for part of the benefits, that's not taxable to employees. So you can imagine what happens if the tax exclusion goes away and all of a sudden, and I want you to think about how high premiums are. So you've got a year's worth of premiums and all of a sudden the employee is getting taxed on that amount. What are the young and healthy ones going to do? Drop it. And then who will remain in the plan? This is why we're so big on this issue. So we don't want anything about the employer-sponsored coverage to unravel in any way, shape, or form. And so we work on this. We watch for it even when it's not headline news because they try to use, this is a lot of money every year. It's hundreds of billions of dollars a year, billions. So it's a bucket of money that's often looked to as a possibility to fund something else that whoever it is wants to do. And so we have to watch it all the time. Even when it's not, number one on the agenda, if they're working on a budget bill, we're always making sure they're not trying to use that money. And put a cap, even to put a cap on it. We don't want anything that will cause adverse selection in employer-sponsored coverage. That would be a disaster for all private plans. Disaster. So we work on that. That's a huge issue for us. We're very loud about it as well. Some issues we work on quietly, because it's faster to get them done behind the scenes, and some which issues we're really loud about, and that's one of them. Employer reporting is something that we've continued to work on. It would create a voluntary reporting system so that if your employer client likes the system we have, they've already gotten it set up, they can continue to do that. But they would also be able to opt into a more simple system where they would voluntarily send in who they've covered at the beginning of the year, and then it would just theoretically be an annual reporting of who's covered and what they're provided, as opposed to the much more elaborate stuff that's required today. And then we're always watching markets. Anything that might destabilize a market or cause something to experience adverse selection, that's just a category that we're watching for, little things and big things. And we also look for things that can just make them better. So we're really aggressive on the issue of prescription drugs, bringing down the cost of prescription drugs, and in a number of different ways. So we've got a whole laundry list of things. We have a special committee on our legislative council that works on this, and we are very active anytime we see a hearing going on with it, and then proactive discussions with members on the Hill as well. And then the other one that we think is a market stabilizer is to not let those uninsured people be priced out of a tax credit because of that family glitch. So we want to fix it the right way, but not mess with the employer firewall. So we've been very vocal on that as well. I do expect them to do that this year. And then really active right now is the issue of telemedicine. And it's very active in a number of different ways. So think of all the ways that people have accessed telemedicine during the pandemic that has expanded their ability to get all types of coverage. So this is a really active one right now, and we might actually see activity on it. We were working on it this morning before I came down here, relative to some language that expanded it to HSAs so that it wouldn't interfere with HSA language, just as an example. The bill has a bunch of other stuff in it too, but that was one of them. There is we have some members of Congress pushing back against some of the mental health language. Some of them, for whatever reason, they don't feel like mental health benefits can be delivered in a telemedicine setting.
Clearly, they've never been crazy.
Right.
My question is, with the telehealth, I think we all agree it's an amazing benefit. Would we be able to influence the DOL interpretation of a group health plan standalone offering and that hurdle? The HSA hurdle is one thing, but then being able to add telemedicine to all employees who, the ACA market reforms is where I'm going with that.
Mm-hmm.
Can we work through that on a regulatory level?
We might be able to do that. We might be able to, if you have a specific line or language that you think ought to be inserted in, you should get that to us like sooner than later.
Okay.
Because we're working on it today. I'm not trying to rush you. I know you're doing this. But if you'll just excuse Jennifer for a little while. Because I know you've been interested in that. So I think some of the things they've already done might make it work anyway, but let's make sure. So if you want to, I'll make sure the right language is.
Will you introduce the Maronis? Or Janet, I'm kidding.
Like that, but okay. So anyway, we are working on that, and then I'm not going to go through all this single payer stuff. We have been extremely vocal on single payer, public option, everything to do with that. There's lots of information on the slides about why public options aren't a good idea. I talked about them earlier, but this is just here for your information. And then for those of you that are in the Medicare market, we've made a lot of progress lately on our COBRA as credible coverage legislation. So that is here for people. We have a lot more people working past the age of 65, and maybe at some point after they do that, they might reduce their hours but still keep on working, and they might, oftentimes they think of this coverage that they want to continue still as their employer plan. But as soon as they're no longer actively employed full time and it becomes a COBRA event, then right now it's considered individual coverage, and it starts their Part B enrollment ticking, and a lot of them don't realize that. And they end up being late for Part B with a penalty for life and unable to access it. It's really important. We have bipartisan support on this. It's just a matter of it escalating up the ladder of, you know, whether it gains the attention we want. We've gotten a lot of attention for it. Same with observation status. If you've had a client affected by this, you know how terrible it is. They're admitted into the hospital, usually through the emergency room. They put them in what appears to be an inpatient bed, but they're classified as observation status. And then when they're not ready, because they're too sick to go directly home for whatever the reason is, they're released to skilled nursing, which it ends up not being covered because they weren't inpatient status for 3 days prior. So we want to just get rid of that requirement. We have lots of support for it. Very interesting coalition on this one, which includes all different kinds of players. We work in coalitions for a lot of different items that we work on, and some of them are more interesting than others. This is one of the more interesting ones. Also, another one that was really interesting on some of the employer-sponsored coverage things that we work on, particularly like the tax exclusion. We, in our coalition, is business and unions at the same table. So it's really, these coalition efforts are very, very interesting. And sometimes you work with people who aren't your normal allies, but they are on a particular issue. So that's that. So the last thing that I want to say, and then maybe we have time for questions or not, I don't know. But if anyone in here is not a member, I'm just going to do this, Jennifer. I have to run over a little bit. If you're not a member, I don't know why you're not a member. Why you're not a member? We're representing you on Capitol Hill and with these agencies. If you're not a member, you're not a member. If somebody else is in your agency's a member, that doesn't mean you are. Maybe you are and maybe you aren't. I need all of you that are in here today to be members. Every one of you. Whoever of you is not, I'm not going to say stand up or hold your hand up. Just know that you need to become a member. And when you join, it's quite affordable. I've been a member since 1984, when I was a broker a long time ago. And I still have my membership, and NAHU doesn't pay that. I pay it because I want to pay it. Because it makes me proud of the professional association that I happen to work for, but that I'm also a member of. And it's important to be a part of your professional association. So you need to do that. There's lots of things you're going to get that I'm not going to go through all of that. Although if you're a member, you should consider contributing to DAHU. Very important. That's what helps us make contributions to people that we would like to see elected for office. So, do I have time for other questions? Are we done? Do you have something you want to ask me?
Quick one.
Yeah, please, speak up.
You mentioned that the president loves ACA, so we wouldn't expect any changes there. Just in case Ms. Kamala could become president, have you all considered what her is?
She's really, well, she's not anti-private coverage. She is slightly to the left of where he is, but remember, now she's got this experience working in this administration. And I can go back to Nancy Pelosi. When Nancy Pelosi came into Congress, she was so far to the left you wouldn't believe it. And she has moved completely to the middle, and like I said, her health policy expert is a very middle of the road person. Now, some issues they'll vote that way, but I don't see any indication of that. Now, she might push a public option harder.
Hey Janet, is there an organization that's like our polar opposite that's working against us, or kind of our nemesis that is always against what we do, or is there nothing? Just curious.
It depends on the issue. Like there are some, there's a physicians organization, well, if I pick like single payer, there's, most of the provider groups are not in favor of single payer. But there's one that is just, and then the Nurses Association, like those. But most of the time, it's just, there might be some particular issue, like There are some employer, like the HR Policy Association, which we're in coalitions with them on multiple issues. But once in a while, they'll be, well, we don't really know for sure what our members think about another option. You know, and
Only members?
yeah, no, well, no, they do poll them, and it's all on the questions you ask, isn't it?
And the audience.
And the way you ask them, and whether it's, you know, whether it's the, which executives are responding. You know, it all depends on who that is. So we're actually pretty well liked and respected. We get along with all the union people, all the people that are, I am really good friends with the woman that runs the DC Health Link, and she is pretty far to the left. Just because they're just normal people, they have kind of extreme viewpoints on some things. And then often you can influence them just by being friendly with them, and they kind of modify some of their viewpoints. So we try to be friendly with everyone and, you know, provide helpful responses. But on the single payer issue, there are the few. That's really the only thing I can think of where it's like that. Now, my last thing I want to say, that was actually a good question. The last thing I want to say is that don't think that any group is always your friend or always your enemy, because you can work with them on some things, even if you can't work with them on something else, and they might completely not be your friend, even though you want to say that you identify with them, even a party. You identify, and this is what I am. I am a Republican, and, well, what do you mean they wanted to do away with the tax exclusion? Okay, but you like them about these others 10 things. I'm not saying you don't say that you're a Republican or a Democrat. Just know that you have to be thoughtful per issue. Per issue. You look at each issue in terms of figuring out, and if you just stick with what is the best thing to do, what is the right thing for me and my clients, what is the best thing to do for people, and to ensure that they have the ability to have some of the choices that they have today. And that's the way we consider things. We have a reputation for that we just do what the right thing is, and that's the reason why we don't really have any enemies. Everyone pretty much likes us, and they think that we're smart, that we get called out a lot, that we have thoughtful, complete, and detailed responses. So now that he says, yeah, I asked you a simple question, and you went on for several minutes, but it's actually kind of important. That issue, that point is important. It's important for you, as you analyze what you see in the news and so forth, look at it with an objective opinion. You know, what is this person saying? Why would they be saying that? And just think of that you might agree with part of what they're saying, but you might have a little nuance on what that is. So I hope this has been helpful.
No, that was great. I like to approach things apolitically, right? We should be apolitical, we should be party agnostic, right?
You mean the way politicians should act this way?
Well, some of them do. Most of them are nice people. Some of them are not.
And there were like 4 questions. They were on transparency. I feel like I asked them to a sufficient degree. Rita had one on like healthcare and healthy patient. No, we have Scott. I'm preaching on that.
Okay, because my question is the healthcare industry, both providers and payers, profit from illness, not wellness. Is there any policy talk about how we can encourage wellness instead of illness?
There's actually a lot of discussion about that. And it's that we've taken more seriously than it has been in a long time. I'm kind of encouraged about the discussions that involve wellness, population health, which Scott will talk a lot about that. He is very interesting. You guys will really like that. And so we also look at what Congress is really interested in working on, and we try to relate our positions on issues to also what they're interested in. So we try to wrap it in together. It makes things easier to get done. And also, it achieves something good.
Okay, we have completed our CE. Sign out. Make sure you sign out on the correct